Over the weekend, the major focus for markets was a bunch of US economic data, and we saw two key themes emerge from this data. Now, first up, there were continued signs that the US economic recovery remains intact, and this was very encouraging. However, the other key theme to emerge was the impact of rising fuel prices on the economy, and we've seen that through higher inflation figures and also consumer confidence taking a bit of a hit. Now, first up, manufacturing figures for February were very encouraging. We saw manufacturing output grow for the third month, and it builds on two very strong gains across the previous months. We do expect that manufacturing activity will continue to underpin the US economic recovery. Now, meanwhile, we had some annual inflation figures out for February, and that showed that core inflation was starting to ease. Although this is likely to be temporary, and as we see a pickup in the US economic recovery, core inflation pressures will pick up. Now, offsetting the decline in core inflation was stronger fuel prices. Again, this is expected to be transitory, but it is concerning as we haven't seen fuel prices come off yet. Higher fuel prices were also responsible for a decline in consumer confidence over March. This is slightly concerning because higher fuel prices can take spending out from elsewhere in the economy. Nonetheless, we are expecting that continued labour market recovery in the US and stronger household income growth will provide some support to households and offset the impact of rising fuel bills. Financial markets were fairly steady as we headed into the weekend. US economic data set the tone, and as this was fairly promising, we saw US equity markets up slightly. Now, the New Zealand dollar continues to creep slightly higher, and it's currently holding in at 82.50 against the US dollar. We do expect to remain around this range for the next few days. The New Zealand dollar is also looking fairly comfortable against the euro, around 62.50. Now, I've seen a lot of volatility in this cross rate settle down in the past few weeks. With the Greek bailout now approved, we're seeing the market is less sensitive to Eurozone headlines, at least for now. Now, the offshore calendar is actually fairly quiet over the first half of this week, and so we don't expect to see any large moves in the New Zealand dollar. The big event for the week will be Q4 GDP, which is out Thursday at 10:45 in New Zealand. Now, market expectations are centred around 0.6% growth, and we don't see any strong risks around this, as this is also similar to our forecast.